Good evening, everyone, students. Sorry for the delay. There was some connectivity issue. And yesterday also, I think there was some connectivity issue with this respect to this, which we had discussed regarding accidental loss of stock. So I will repeat that topic today. Don't worry about it. So the first, yesterday, whatever we discussed, I will be revising. The last half an hour of the class was not some people, there was some connectivity issue because of which students said that it can't be seen on the screen. So that is why I am repeating that topic. So we were discussing accidental loss of stock, how to record the journal entries. So there are three situations in this. What are those? The first one is not insured. Here, partly insured. And here it is fully insured. Okay. Yes. Now, in case of not insured, that means your stock is not at all insured. So if you lose the stock due to fire or an accident, it is going to be your loss. Okay. So when you lose stock due to fire, first thing is we are facing a loss. Correct. Now how to capture this loss is the question. What are the journal entries that we pass during this loss is the question. So let's assume you have made a purchases of rupees 1 lakh. Okay. Out of which 10,000 worth goods lost due to fire. Okay. Yeah. Now, this is your trading account. Let's say this is your trading account. So it will be two purchases, 1 lakh, right? Yes, sir. Then suppose let's assume that there is no sales, nothing else. Why? Because we are starting the business and we have purchased the goods. That's it. So by closing stock, will you show 1 lakh or will you show 90,000? We will show only 90,000. Why, sir? Because 10,000 is lost due to fire. 10,000 is lost due to fire. So what is the net stock remaining with us? Is only 90,000. Correct? Yes, sir. Correct. So now look at your trading account. Are you getting a gross profit or a gross loss? Look here. The total here is 90,000 and the total here is 1 lakh. So is there a gross loss? Yes. By gross loss, 10,000. But my question to you, you have written here as a gross loss, right? 10,000. But my question to you, is this gross loss which is coming, is it due to trading? Is it due to trading activity? Is it due to trading activity? See, the name trading account, the main objective of the trading account is to calculate how much profit you are making only on trading activity or how much loss you are making only on the trading activity. Correct? Nothing else. It wants to know how much trading you are making, how much profit you are making using the trading activities, and how much loss or profit, whatever it is, you are making out of trading activities. What are trading activities? Trading activities is nothing but purchasing the goods and selling the goods. Out of this, how much profit you are making, it wants to capture. But now your trading account is capturing a gross loss. Your trading account is capturing a gross loss. But is this loss relating to trading account? Have you tried to sell the goods and made a loss? Or have you tried to purchase the goods and made a loss? No. You have neither sold the goods and made a loss, neither you have purchased the goods or made a loss. Sir, then when can be loss in trading account? When there can be loss in trading account? When there can be loss? There can be loss in situations like this. In trading account, loss can be when, say, you purchased at 100 rupees and you are selling at 90 rupees. This is trading loss. You are purchasing it at 100 and selling it at 90. This is your trading loss. Sir, why will I sell it at loss, sir? If you remember correctly, the COVID example where I bought mask paying 5 rupees or 10 rupees, whatever it is, thinking that I will be able to sell it. But suddenly COVID came down and masks were completely gone out of business. Now, suppose I purchased it for 8 rupees thinking I can sell it for 10 rupees. Now the same masks are being sold for 5 rupees or 2 rupees, whatever it is. Have I made the loss? Yes. That loss is made by what? By selling the goods at a cost lower than the purchase price. Such loss are called as trading loss. See, this type of loss is called as trading loss. But this kind of loss is not a trading loss, rather it is non-trading loss. It is non-trading loss. That means this fire has nothing to do with my sales or purchases. Has nothing to do with my sales or purchases. Is everyone understanding? Yes. So if this loss is not with respect to my trading account, then why I should show it in my trading account? Understanding, everybody? This loss has nothing to do with the trading activity. Correct? Then why you are showing this loss under trading account? Correct or no? Makes sense? If loss is not relating to trading activity, then why we should show it in trading account? Right? You are right. That is why such losses will not be shown in trading account. Such losses will not be shown in trading account. One second, guys. So this way of presentation will become wrong. So what actually should happen is, if this is your trading account, what you ideally do is 2 purchases 1 lakh minus loss due to fire is how much? 10k. The net amount 90,000 will be written here. Now closing stock will be by closing stock 90,000. Now is there any gross profit or gross loss? No. Okay, sir, correct. Gross profit, gross loss, ಏನು ಇಲ್ಲ, sir. Agree. But there is a loss, no, sir. We have to account the loss somewhere. Yes, you are right. The loss is there. The loss has to be accounted. Where do we account such loss? We account such loss in profit and loss account. In profit and loss account. Clear? So how do we account it, sir? We will show here as loss due to fire 10,000. Now here I will get a net loss. Let's suppose assume that there is no other expenses or there is no other income. So now we will have by net loss 10,000. So loss is there, appa. Nobody is telling loss is not there. But loss will not, this kind of loss will not come in trading account because this has nothing to do with my trading activity. That is why such loss should not be shown here. Rather, it will be shown here. It is a business loss, but it is not a trading loss. So that is why we take out such loss from trading account and we pass it or post it in P&L account. Here, why I am reducing 10,000 from my purchases? Because you made purchase of 1 lakh, but in that 1 lakh of purchases, 10,000 worth of purchases is not there. Why it is not there? Fire. Correct or no? So what is net purchases? Net purchases is only 90,000 then. That 90,000 only will become our stock. Correct or no? You had purchased 1 lakh worth of goods. In that 10,000 goods is on fire. Now what is remaining? Only 90,000 worth of goods. So what is your net purchases? Only 90,000. Sir, what happened to remaining 10,000? That also I purchased. No, sir. Yes, you purchased, but that has become loss now. So it will not come under purchase, rather it will come under loss. So that loss will be pushed in the P&L account. So what is the journal entry you will record? The first journal entry which you will record is loss of stock due to fire, debit. Sir, why we are debiting, sir? Why we are debiting? Because it is a loss. It is an expenses. When expense goes up or loss goes up, it will be debited. Yes, sir. Correct, sir. Now, where we want to reverse this loss, where we want to take out this from, loss should get an amount, right? This amount of 10,000 should come. From where this 10,000 will come? This 10,000 is coming out of purchases. So, we'll hit purchases. So this entry only makes you to reduce 10,000 from the purchase. This is the journal entry which will connect you here. This adjustment is there, no? That adjustment is connected to this journal entry. If you pass this journal entry, automatically you will reduce the loss from the purchases. Clear? Okay, sir. Done. Now what next, sir? Second step. Now this loss has to be posted to somewhere, no? Where it should be posted? It should be posted to P&L account, sir. Correct. So how to close this? It was debited. Now we will credit it. So what is the entry? Profit or loss account debit to loss of stock due to fire. 10,000, 10,000. 10,000, 10,000. That's it, appa. This is how you record your loss in case of no insurance. In case of no insurance. Any doubts in this? Anybody is having any doubts in this? If you have any doubts, you can ask. Okay. I think it is pretty much clear. Loss, we are accepting that there is a loss, but that loss we are shifting from trading account to P&L account. So I request everyone to please take a note of this. This is the wrong method. This is the wrong method. This is the right method. Okay. Take a photo, please, quickly. Then the journal entries. Always remember to write this, whatever you have written, no, English. The same should be used here also. Don't use different words in different entries, because we are trying to close this account only. So this both should have the same things. Loss of stock due to fire anta idre illu loss of stock due to fire antane irbeku, because it is one account. This is same account, this is also same account. Clear? Yes? Okay. Now this is for your not insured. Now let's talk about partly insured. Okay? Yes. Now we'll discuss partly insured. Now what happens? What is partly insured, sir? I purchased rupees 1 lakh worth of goods. Okay. Lost due to fire 10,000. Lost due to fire 10,000. Out of which 5,000 is insured. 5,000 is not insured. 5,000 is insured, 5,000 is not insured. That means what? Out of 10,000 which I have lost, I will definitely receive 5,000 rupees back from insurance company. 5,000 I will not receive from insurance company. Why I will not receive it from insurance company? Because I have insured only 5,000 worth of goods. The remaining 5,000 worth of goods I have not insured. Clear? Yes. Now, trading account is clear appa. Now no doubt about trading account, correct? So trading account, how it should look like? Your trading account should look like 2 purchases 1 lakh minus loss due to fire 10,000. 90,000 is your net purchases. So buy closing stock 90,000. Hinge ಕಾಣಿಸ್ಬೇಕು. Sir, out of 10,000, 5,000 is repaid by insurance, no sir? Correct, sir. But 5,000 which insurance is paying has nothing to do with the goods which I have lost. Insurance will pay me the money. Ashte. Insurance will pay me the money. They are not giving us the goods. Understanding? They are not giving us the goods. What they will do? They will pay us the money which we have lost. So ultimately, how much goods you are having in your godown? Only worth 90,000. Sir, 5,000 I am getting, that is in the form of cash or bank account. But what is the goods you will have? You will have goods of only 90,000. 10,000 is gone. It is burnt already. Fire has already caught up. Clear, everybody? So your trading account will still look like this. So, but that loss has to be booked somewhere now, sir. Correct, you are right. Loss has to be booked somewhere. Good students. Where to book that loss? Where to book that loss? Yes, we will book it in P&L account. Correct, sir. It will book it in P&L account. Yes, good. Now, how much is the loss, sir? Sir, to loss due to fire is 10,000, sir. Oh, is it? Okay, good. Loss due to fire is 10,000. Everybody knows. Correct, sir. Sir, but out of that 10,000, I am receiving 5,000 back from my insurance company. Oh, correct. So that will have to be recorded by insurance company, 5,000. So what is the net loss? The net loss is only 5,000. If anybody is having doubt as to, sir, why you have written insurance here? Why did you write expenses here? Don't ask this question, because already we have discussed the format of profit and loss account. In profit and loss account, I have already told in the beginning only, losses or expenses will be recorded on the debit side. Income will be recorded on the credit side. Income will be recorded on the credit side. Expenses will be recorded on the debit side. Now, whatever money we are receiving from insurance company, it is kind of an income for me, correct or no? Of course, income against expense there. It is not exactly an income, but we are receiving the money, correct or no? So that is why we will put it under income. On the credit side, we are receiving the money. Understanding? In fact, this is just a plain layman explanation which I can give you, saying insurance money is a income, so we are recording it on income side, and expense is on debit side. This is the layman way of explaining. But if you look at journal entries, how the journal entries are passed, the first journal entry will remain same appa. What is the journal entry? Loss due to fire account debit. How much? 10,000. To purchases 10,000. To purchases 10,000. Right. Yes, sir. Any change in this? No change in the enter. Next. This loss has to be transferred somewhere, no? Where will we transfer? Sir, we'll transfer it to P&L account. So earlier it was debited, now we are going to credit it. So profit and loss account debit 10,000 to loss due to fire 10,000. Now look at the, earlier I explained, no, expense will come this side, income will come this side. Now look at the journal entry, how actually the accounting works. Profit and loss account is debited. So we'll start on the debit side. This is debit side, this is credit side, correct? We'll start on the debit side and we'll write to loss due to fire. To loss due to fire. That is what we have written. Layman language, debit side you will write expenses, credit side you will write income. But journal entry also proves the same. P&L account was debited, so we'll start on the debit side and we'll write to loss due to fire. Am I clear? Everybody? Yes? Okay. Now record an entry for inflow for the money which we are receiving from insurance company. So what is the entry? From whom we have to receive money? We have to receive money from insurance company. We have to receive money from insurance company. So insurance company is my receivable balance. Is it like collectible? It is a party. It is a debtor for me. Correct or no? Insurance company acts like a debtor. Yes, sir. Yes, sir. So insurance company account debit. Sir, why it acts as a debtor, sir? The moment fire starts, I know money is collectible from insurance company. So the moment I have collectible from somebody which is into business or business purpose, it is usually our debtor. Correct? So I have money collectible from insurance company. Why we are collectible from insurance company? Because there is a fire and we have taken the insurance saying whenever the fire happens, you will pay the money. So fire happened, now insurance company has to pay us the money. So that is why receivable from insurance company, that is why I debit it. To what, sir? To insurance proceeds. Insurance proceeds. It is a kind of income. Inflow of money, right? It is an income. In fact, it is not exactly an income, but it is something which will reduce our expenses. But if you look at normal sense, if you have not taken insurance, every money would have become lost. Correct? So something which we are returning back. So we'll consider it as income. Okay? Yes, to insurance proceeds. Now, this is an asset account. This is an asset account. This is an income account. Correct? Now, asset account will go to balance sheet. Income account has to be closed. Correct or no? So, how to close income account? Simple, sir. Earlier we credited. Now we will debit it. Insurance proceeds account debit to profit and loss account. How much? 5,000. 5,000. This is what is written here upon. Can you see it? Insurance proceeds debit to P&L account. So P&L account is getting credited. So we will start on the credit side. If you start on the credit side, you will write down by insurance proceeds, which is written here. Am I clear? Everybody? Sir, okay, sir, done. It is clear, sir. But how will you close this one, sir? How will you close this one? How will I close that one? I'll pass one more entry. When I receive the money, what is the entry? Bank account debit to insurance company account. Asta. Close. Earlier debited, now credited. Account closed. Why? Earlier it was collectible. Now we have already collected the money. Earlier it was collectible from insurance company. Now we have already collected the money from insurance company. Am I clear? Everybody is understanding? Yes. Now this method of accounting is called as first method. First method. There is one more method in this. Sir, one more method? Yes, sir, one more method. Second method. What is second method? Second method, the first two entry remains same, sir. This and this entry remains the same. There is no change in this entry. Only changes will be in these three entries. What will be the changes, sir? What will be the changes is simple, sir. I have to receive money from whom? From insurance company. Correct, sir. Insurance company. So I will debit insurance company. Insurance company account debit. Insurance company account debit. Okay? Insurance company account debit. Correct, sir. Insurance company account debit. Yes, sir. I have to receive money from them. How much you have to receive? 5,000. Yes, sir. Right. 5,000. Now, earlier what we did, we transferred it to insurance proceeds account, which was a income account, right? Which was a income account. But now, instead of passing and creating one more income account, ultimately, what is this 5,000 doing? This 5,000 is reducing your loss. Correct or no? This 5,000 is reducing your loss. Ultimately, your loss is reduced to only 5,000. Why? Because 5,000 you are receiving from the insurance company. So ultimately, this 5,000 is actually reducing your loss, overall loss. Correct? So what I will do is, I will directly transfer it to loss due to fire account. Loss due to fire account. One second. Idu illivargalapa. This one also you take part of this. This is first method. Sorry, my mistake. Second. Okay. Insurance company account debit to loss due to fire. Now look at it carefully. Earlier you debited loss due to fire account only by 10,000. How much? By 10,000. This is the first entry. Now here in the second entry, you are crediting loss due to fire by how much? By 5,000. I'll explain it to you. Don't get confused. Earlier, you debited loss due to fire account by 10,000. Now you are crediting loss due to fire account by 5,000. So what is the balance remaining in loss due to fire? Debit 10,000, credit 5,000. What is the balance remaining? Only 5,000 rupees. So that 5,000 will be transferred to P&L account. So what is the entry? Profit and loss account debit to loss due to fire. How much? 5,000. 5,000. Sir, how 5,000 you arrived, sir? Why you are crediting, sir? Simple answer, sir. How much did I debit? 10,000. How much did I credit? 5,000. So debit minus credit will remain with 5,000. So 5,000 amount on the gotatu, sir. But how did you credit it? Simple answer is, my debit side is 10,000, my credit side is 5,000. Which is higher? Debit side is higher. That means my balance will be in debit only. Correct or no? My balance will be debit only. So debit balance 5,000. Now how to close that? Because that debit balance has to be transferred to P&L. Yes or no, sir? That debit balance has to be transferred to P&L. Expense account will always have a debit balance. If you remember basic classes, expense account will always have a debit balance. So now I am having a debit balance of 5,000. Now I need to close it. How do I close it? I credit it. So that is why I am crediting here. Understanding? If you still want me to explain more, think like this. Loss due to fire account. Let's say we have opened this account, ledger account. Okay, first entry will be what? 2 purchases, 10,000. Next entry will be buy insurance company, 5,000. What is remaining? 10,000. Here 5,000. But here also it should be 10,000. So balancing figure is 5,000. Will be transferred to by P&L account. That is what is the entry? P&L account debit to loss due to fire. Loss due to fire is credited. So we are starting on the credit side and P&L is getting entered here. So read the entry: P&L account debit to loss due to fire. P&L account debit to loss due to fire. Debit, credit. Loss due to fire is getting credited. So we'll start on the credit side and we'll write down P&L account. The same thing is recorded in the journal entry. Understanding, everybody? Yes, mathematically also I explained you. Ledger wise, accounting wise also I have explained you. Am I clear? Any doubts in this? I hope it is clear. Correct? Okay. Now, next journal entry, we have to receive money from the insurance company, right? Now, when we receive the money, what is the entry? Bank account debit to insurance company 5,000, 5,000. Done. All the entries done. So here, in fact, there will be one less entry. Here, in the second method, there will be one less entry. In first method, there will be one extra entry. So in first method, what we did, we didn't adjust the insurance money with the expenses. In the first method, here, insurance proceeds was not adjusted with expenses. Here, insurance money was directly adjusted with expense account, that is loss account, loss due to fire account. Loss due to fire account. Clear? Yes. Now, sir, in second method, how will my trial balance look, sir? Sorry, how will my P&L account look? How will your P&L account look? So let's first write down here. This remains same for first and second method. This is for first method. Okay. Now we will see how it will look under second method. P&L account. Now here what changes? To loss due to fire. Only 5,000. Why? Because only 5,000 was remaining. Correct or no? Only that much we transferred to P&L account. See here. Only that much was transferred to P&L account. So it will be directly to loss due to fire. Nothing else. Sir, insurance proceeds. Insurance proceeds is already adjusted. No. See here we showed 10,000 and we showed insurance proceeds on the right side. 10,000 as expenses, 5,000 as income. Instead of doing that, what we did here, that 5,000 whatever we received, we already adjusted against our expenses or loss. So what is remaining? 5,000. So what is the loss? By net loss, 5,000. Did the answer change here? No change in the answer. Answer remains the same. What changed? The way you present changed. What changed? The way you present changed. Clear? Sir, which method to follow? Whichever you feel you want, you can follow. There is no restriction. Whichever you want to follow, you can follow. I mean, whichever method you feel good and feel confident about, follow. Okay? So that is your partly insured. Please take a screenshot quickly. Done? This is your first method. This is your second method. This entry remains same. Same under both methods. I'll write down in a right manner so that you don't forget it. Same entry under both method. What changes? Here it changes. Okay, please take quickly one more time screenshot. Done. This is your second method. Okay, next, this is the ledger account for your clarification. This is ledger account for your understanding. Clear? Okay, yes. Now we'll go for fully insured. Fully insured. Now what happens? Everything remains same. Sir, I purchased 1 lakh. Purchased, sorry. Purchased 1 lakh, out of which 10,000 lost due to fire. 10,000 lost due to fire. Okay, correct, sir. But fully insured, fully insured. So what ultimately what happens? I will not have any loss. Why? Because fire is there. I lost the goods, but I will receive the money from insurance company. Okay. So what happens? The first adjustment will remain the same. What is that? Your trading account. What will happen? Two purchases, 1 lakh minus loss 10,000, remaining 90,000. Here, buy closing stock 90,000. So there is no change in this entry. Okay, sir. We have to show this loss, correct or no? So here also there are two methods. First method, second method. Now by now you should be aware what is so different between first method and second method. First method, what will show? To loss due to fire 10,000 by insurance proceeds 10,000. Ultimately, any loss, any profit, nothing. No loss, no profit. Okay? Yes, sir. Now, under second method, what will happen, sir? Under second method, what will happen? P&L. To loss due to fire, 0, 0, 0. Nothing. Huh? Yes, sir. How? I will explain it to you. First, let's take first method. First method. What is the first entry? First journal entry? First journal entry is simple, sir. What is the first journal entry, sir? Loss due to fire account debit to purchases. This will remain same. This entry will remain same for first method as well as for second method. Clear? I'll write it down here only so that you don't get confused. 10,000 okay. Second entry will be what? Second entry will be, I will transfer this loss to P&L account. So P&L account debit 10,000 to loss due to fire. Correct, sir. Next entry will be what, sir? Insurance receivable from insurance company. Correct or no? So insurance company account debit 10,000 to insurance proceeds 10,000. Now this insurance proceeds is a income account. This is a asset account. This needs to be transferred to P&L. So what is the entry you pass? Insurance proceeds account debit 10,000 to P&L account. Next, this is going to be received in the bank. What is the entry? Bank account debit to insurance company 10,000. Now, this entry and this entry is getting reflected in your P&L account. See here. P&L account 2 loss due to fire, 2 loss due to fire 10,000. Here, insurance proceeds account debit to P&L account, insurance proceeds account debit to P&L account. P&L account was credited, so we are writing on the credit side as by insurance proceeds. Clear? This is your first method. This is your first method. Okay. Now, what happens in the second method, sir? Second method, what happens, sir? What changes? This entry will remain as it is. Only thing that changes is second entry. What is the second entry? Second entry, when you receive the money from insurance, you will directly adjust it with the loss. So what is the entry you will pass? Insurance company account debit to loss due to fire. 10,000, 10,000. 10,000, 10,000. Now, earlier, loss to due to fire was debited with 10,000. Now it is crediting with 10,000. What is the balance remaining? 0. Earlier, loss due to fire was debited with 10,000. Now it is getting credited with 10,000. So what is the balance remaining? 0. That is why here we are showing as 0. Understanding? Yes. And now what will happen to this account, sir? Same. Bank account debit 10,000 to insurance company 10,000. Last step. Okay. Here, what did we do? Insurance amount was not adjusted with loss. Rather, it was shown separately. Correct? What did we do here? Insurance amount was adjusted against or adjusted with loss. Please note it down. I hope it is clear. If you are having any doubt, you can put it in the comment. You can reach out. Maybe if you go home, try to study, then get confused also, you can reach out in the next class. So please take a photo of this. Screenshot. Don't just keep taking screenshot and keeping it in screenshots only. Note it down in the books. Then only it will be helpful in the exams. Now copy the journal entries. Take a screenshot of first method journal entry and second method journal entry. Done? Okay. Sir, I request you not to follow these journal entries because they have directly given you final entries which you will not understand. So please forget this entries which are given in the book and please follow my method. Then you will be able to understand. Clear? If you directly see this entry, you will not understand anything. That is why I took so much of time and tried to explain this journal entries. Am I right? Okay. Now manager commission on net profit. Next part is manager's commission on net profit. See, whenever there is a commission, there are two ways of commission. What are those two ways? One way is commission on net profit. Next is commission on net profit after allowing such commission. After allowing such commission. There are two ways. One is commission on net profit. One is commission on net profit after allowing such commission. Which commission, sir? This commission. In other words, here, if my net profit is 1000 and my commission says 10%, so it will be straight away, commission will be 1000 into 10%. That will be 100. This is under this method. Okay. Now under this method, what happens, sir? Under this method, what happens is 1000 is your net profit. Okay. And there is a commission. So net profit is 1000 and there is a commission. How much is the commission? Sir, they are telling after net profit, after deducting the commission, what net profit will remain? No, sir. On that net profit commission. Idu hengandre, sir, ಒಂದೇ ಫೈನಲ್ ಆನ್ಸರ್ ಕೊಟ್ಟಿಲ್ಲ, ಅದ್ರೊಳಗಡೆ ಮತ್ತೆ ಇನ್ನೊಂದು ಕ್ವಶನ್ ಕೇಳಿದ್ದಾರೆ ಹಂಗೆ. ಓಕೆ, ಇಟ್ ಇಸ್ ಬಿಟ್ ಕಾಂಪ್ಲಿಕೇಟೆಡ್ ಬಟ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್ ವೆರಿ ಕೇರ್ಫುಲ್. ಇಟ್ ಇಸ್ ಈಸಿ, ಸಿಂಪಲ್. ಯು ಜಸ್ಟ್ ಹ್ಯಾವ್ ಟು ಥಿಂಕ್ ಅಬೌಟ್ ಇಟ್, ದೆನ್ ಯು ವಿಲ್ ಗೆಟ್ ಟು ನೋ. So my net profit is 1000. Let's take commission is X. What is remaining? 1000 minus X. 1000 minus X. 1000 minus X. Now, how this X is calculated? How is this X calculated? How is this X calculated? This X is calculated like this. 1000 minus X into 10%. 1000 minus X into 10%. Correct or no? On this, you are going to get 10%. And this total figure will be equal to X. Bit complicated? Yes, you need to, I understand it is difficult, but you need to get hold of this. If you try to solve this equation, how you will solve it? 10%, if you open the bracket, it will be 10% of 1000 will be 100 minus 0.1x is equal to x. Now 100 is equal to 1.1x. So x is equal to 100 divided by 1.1. So that will be, anybody can tell me? 90.91. Answer is 90.91. Sir, you found out, no sir? Now prove it, sir. How it will work? How it will work? You prove it. Wait. Let's see whether I have done correctly or no. You want to test it, right? Whether sir is teaching correctly, whether sir is teaching wrongly. Yes, correct. Let's see. 1000 is our net profit. What is the commission? 90.91. What is remaining? Minus 1000. Minus 90.91. Oh, sorry. One second. That will be 909.1. ಈಗ ನೋಡಿಯಪ್ಪ ಏನ್ ಹೇಳಿದ್ರು ಅವರು? your commission should be 10% after deducting such commission. After deducting such commission, whatever net profit is remaining on that 10%. Now you calculate 10% on this 90.91. That is what is here. They told you your commission will be 10% on net profit after deducting such commission. Which commission? The commission which you are calculating. So my net profit after deducting such commission is how much? 909.1. Now 10% of this 901. Why 10% now, sir? Because we have already deducted the commission. So 10% of this will be how much? 90.91. That is what is deducted. That is what is deducted. So using this equation, we found out the answer. Using this equation, we found out the answer. What was the answer? How did we find out, sir? Our net profit is 1000. We have to pay the commission. Let's say commission is X. What is the net profit after commission? Net profit, this is called as net profit after commission. So net profit after commission is 1000 minus X. Now, on this 1000 minus X only, we pay 10%. Correct or no? That is what. On this 1000 minus X, we pay 10%. Correct? And that is called as what? Commission. This is nothing but commission. Now, if we solve this equation, we get the commission amount. Now, you put the commission amount here and get the net profit after commission and try to apply this 10% on net profit after deducting commission. That will be equal to commission. Sir, why so complicated, sir? Earlier method, what used to happen? I'll tell you what exactly difference is there between these two methods. You will be understanding in better manner. Earlier method, net profit was how much? 1000. Commission was 10% on what? This. That will be 100. What is remaining? 900. Done and dusted. Now, earlier 10% was directly done on this net profit. That is nothing but net profit before deducting the commission. Net profit before deducting this commission. Here, net profit after deducting the commission. That means here the 10% is applied after deducting the commission, but here 10% is directly applied on net profit. That is 10% into 1000. You're understanding? 10% into 1000. Sir, one problem, sir. Yes, tell me what is your problem. Sir, the problem is, sir, I joined company secretary because I was very poor at mathematics, sir. But now you are bringing algebra. What should I do, sir? You are again bringing back the algebra. What to do, sir? Tell me, sir. How do we avoid these things? How can we avoid these things? How to avoid these things, sir? This is the formula which we will use. What is the formula, sir? The formula is simple. What was the profit before commission? The profit before commission was 10,000. Correct? Yes, sir. Correct, sir. Okay. What is the percent rate of commission? Rate of commission was 10, sir. Okay. Divided by, we will do 110. Sir, what is this 110, sir? What is this 110? This is nothing but 100 plus rate of commission. 100 plus, this is nothing but rate of commission. So 1000 was your net profit before commission. 10% was the commission, divided by, we will use 100 plus we will add the rate of commission here. This is the formula. This is the formula. In other way, if you want me to explain this formula, if you don't want to by heart and understand, listen to me carefully. What is the other way, sir? Let's assume net profit after commission as 100. Net profit after commission as 100. Okay, sir, done. Very good, sir. Very good, sir. Understanding, sir. Go ahead, sir. Next, what, sir? Next, let's take commission as 10. Let's take commission as 10. Is everybody understanding? Yeah? Okay. Next, we'll take net profit before commission. Is 110. Sir, how 110, sir? Sir, net profit after commission is 100. Andre, you started from net profit, you reduce the commission, you got net profit after commission. Correct? So, if this is 100, if this is 10, then how much is net profit? Ulta, sir. From here, you reduce this, you got this. Now you are here, you have here. How to calculate this? 100 plus 10 will give you this. If you are, I'll explain it to you again quickly. See here. Your net profit was X. Your commission was 10. What was the remaining? 100. What was remaining? 100. This is what? This is net profit after commission. Correct? Now, how much would be X? X should be 110 only, no? 110 minus 10 is equal to 100. So, if you don't know this, suppose you don't know what is this X. How do you calculate it? 100 plus 10. In other words, X minus 10 is equal to 100, no? If you want to find out X, how you will do? Send 100 this side. So, 100 plus 10. That is what is. So, 100 plus 10 is equal to 110. Understanding, everyone? Yes? Okay. Now, you have written like this, no? Now you have to see what figure is given in the question. Have they given net profit after commission or have they given net profit before commission? They have given net profit before commission. Hello, the question they have given is net profit before commission or after commission is the question. If they have given net profit after commission, write that amount below that. Say for example, see here, listen to me very, very carefully. Have they given net, in our question, they have given net profit before commission. How much was that, sir? It was given as 10,000. Sorry, 1,000, 1,000. Sorry, appa. 1,000. Okay. What do you want? Sir, I want two things. I want this. I want this. But my question, if you find out one, you can find out other? Yes, sir. So shall we find out this part? Shall we find out this part? Yes, sir. So what I will do is, I will do cross multiplication. What is cross multiplication, sir? This is x. Okay. So x into 110. X into 110. 1,000 into 10. So x is equal to 1,000 into 10 divided by 110. Sir, this is the exact formula they have given here. The meaning behind the formula is this one. Our formula direct kottidare. I am trying to, sorry, they have directly given the formula, but I am trying to explain you how that formula has come out. Understanding? This is the exact formula they have told, and that is the exact formula we have arrived by ourselves with the explanation. Am I clear? Everybody? Yes, any doubts in this? Am I clear, guys? Sir, what if they have given directly net profit? Sorry. Sir, what if they have directly given net profit before commission? Where did it go? Sorry. Sir, what if they have given you, now you told me they have given this figure, net profit before commission. Correct, appa? They have given this figure, sir. You wrote it just below that. They had given you net profit before commission. What if they have given net profit after commission, sir? If they have given me net profit after commission, what to do, sir? Then directly multiply, no? If they have only given you net profit after commission, then directly multiply. If you want, you can still put the figure. Say, for example, they have given this as 1,000. 1,000 into what you want? You want this or you want this? I want this, sir. Cross multiply. 1,000 into 10, 100 divided 100 into x. Again, 1,000 into 10 divided by 100. In other words, you can directly apply the percentage, no? Correct or no? Everybody's understanding. The first part is very simple, sir. They are giving you commission on net profit directly. That you directly apply. No problem in the first method. Second method, this is the problem where they are giving you net profit before commission, but they want you to find out the commission on net profit after providing such commission. In that method only we use this formula. Am I clear? Please note down this if you want. This entire thing, this entire explanation. This is the whole idea behind the formula, sir. Okay? Yeah. If you have not understood, revise again. But still, if you have not understood, please remember the formula, which I would still don't want you to do it. But if you want to, if it is unavoidable, you have to do it. Next, goods distributed as free samples. See, whenever I distribute the goods, it is for what? Why do you think I distribute the goods freely? Why do you think I distribute the goods freely? Am I mad? No. Then why do I distribute it freely? Because I distribute it freely because for my promotion. For my promotion. It is an advertisement. It is the way you can advertise. So when you distribute freely the goods, you are incurring an expenditure. What is that expenditure? You purchase the goods for some amount, but instead of selling those goods, rather you are distributing it for free. So are you incurring an expenditure? Yes. But is this expenditure trading activity? No, it is not a trading activity. Why? Because if you have purchased the goods and still sold it, but if you are selling it at a price lower than the purchase price, then it will become trading activity. Here I am not selling it, I am giving it for free. Whether you want it, whether you don't want it, I am giving you. Whether you want it, whether you don't want it, I am giving it to you. So here I am incurring an expenditure, and this expenditure is not in the form of trading account, but this expenditure has to be recorded. So where I'll record it? I'll record it in P&L account, and such goods which are distributed freely has to be taken out of purchase account. Just like how we did no loss due to fire. We took that goods amount from the purchases account, from the trading account. In the same way here also we have to take those amount from the trading account, and we have to transfer such goods to P&L account as advertisement or promotion expenses. So the entry is free sample or advertisement account debit to purchase account. Don't worry about trading account, remember purchase account. Clear? Drawings of goods by proprietor for personal use. Here also same appa. It is no more our trading. Whenever I take the goods for my home, it is a loss for businesses. That goods will no more be available with them. Correct? But because I am the owner, I can be taken accountable for that. Right? So even though I don't pay the money, but there is an account in my name in the business, owner account, capital account or drawing account. Correct? I can hit that account. Yes or no? I can hit that account. So whenever I draw the goods, my purchases will come down. Why? Because those goods are no more with me. Correct? So who is taking that goods? Owner. So I can hit his account? Yes. In case of loss or in case of free samples, I could not hit anybody's account. Why? Because it is lost. Nobody is taking accountability of it. Free sample is also something where we are giving it for free. Nobody will pay me in future. There is no accounts that I have given free to ABC. In future, they will do something for I will get something from ABC. Nothing. Same goes with loss on fire. But whereas owner, if he has taken goods, he has capital account with me or no? He has put the money, he takes out the money, I will adjust it against that capital account. So what is the entry I will pass? Drawings account, debit to purchases account. It should come out of purchases account because it is not a trading expenses. So any expenses which is sitting in trading account should be taken out. So that is why I will pass it to purchases account. Clear? Debit drawing account. A drawing account is part of capital account. In other words, whenever I take goods from my business, my balance will come down, correct or no? Why? Because suppose say I have put 1000 rupees worth of money into business. Now I took 100 rupees worth of goods. Now business will say what, you put 1000 rupees, yes, I agree. But 100 rupees goods you took back, no. So what is the balance remaining? Only 900. So what they want to do, when you introduce the money, what is the entry you pass? Bank account debit to capital account. That time they increased your capital. Now when you take out the money or when you take out the goods, then they will decrease the capital account. So when capital goes up, it will be credited. When capital comes down, it will be debited. So they are going to debit your capital account. Only thing is drawings account is the name that is given. Ultimately, drawings account will also get adjusted to capital account only. Don't worry. Clear? Yes? Okay. Next is deferred revenue expenditure. What is deferred revenue expenditure? We have already understood. Where the expenditure can be enjoyed for more than 1 year. Where an expenditure can be enjoyed for more than 1 year. So that is deferred revenue expenditure. The entry will be every year from deferred revenue expenditure you will transfer to P&L account. Every year you will transfer that from deferred revenue expenditure account to P&L account. Deferred revenue expenditure is kind of a miscellaneous asset. Suppose, let me just explain it to you. When I incur any expenditure, what I will do? Expenditure account debit to bank account. Correct? But later I came to know, say for example, 1000 rupees. But later I came to know this expenditure can be used for next 5 years. So what I will do? This entire 1000 rupees will not be transferred to P&L. Why? Because matching concept, periodicity concept, accrual concept. What does it say? Rate of expenditure for which you have actually incurred. So even though I have spent 1000 rupees, but not entire 1000 rupees is enjoyed by me. So not entire 1000 rupees is incurred in the business for business benefit. Correct? So I can use it for 5 years. So what I will do is I will transfer this expenditure to deferred revenue expenditure. What is the journal entry? Deferred revenue expenditure account debit to expenditure account. 10,000, 10,000. Now this account is getting transferred to this account. Now, once this account is having 10,000 balance, what I will do is year 1, 5 years I can use so 10,000 divided by 5 years means every year I can use 2,000 rupees worth of expenditure. So every year what I will do is I will pass this to P&L account. So P&L account debit to deferred revenue expenditure 2,000. So out of 10,000, 2,000 transferred to P&L in first year. Second year, same. Third year, same. Fourth year, same. Fifth year, same. So after first year, what is the balance remaining in deferred revenue expenditure? 10,000 minus 2,000, remaining 8,000. After second year, it will become 6,000. After third year, it will become 4. After fourth year, it will become 2. After fifth year, it will become 0. So how does it become 0? By passing this entry. Clear? Okay. Next, goods on sale on approval basis. See, this is the special circumstances where you send the goods to your customers. But the moment you send the goods to customers, it is not sales. Why? Because customer never asked, you send the goods, I'll pay you the money. Instead, your customer told what you do one thing, you send this particular item. In that, whatever I feel like it is useful for me, I will keep it. Remaining, I will send it back. So here what is happening? I am sending the goods, but the moment the goods are shipped to my customer, it is not a sales. Rather, the sales will happen when customer says, okay, I am selecting out of 10 items, I am selecting 6 items. Now that 6 items sales happen. When it happens? When customer gives the approval. When he accepts it. In simple words, your Flipkart and Amazon, cash on delivery. They send the goods. COD. The moment it comes to your doorstep, now it is in your hand to take it or leave it. If you take it, it becomes sale and approval is received. If you don't take it, it will go back and it is not a sale. Of course, this particular transaction cannot be said as sale on approval basis. I'm just giving you an example for understanding. This is not a sale on approval basis thing, but this layman language you can understand better. Clear? The sale on approval is clearly written, where I am sending you this much goods. Whatever you approve, you keep it. Whatever you don't approve, you send it back. This is how sale on approval works. In Amazon, not like that. No, you can't keep one package you give to second package. ऐसा नहीं होगा. लेना है तो पूरा ले लो, नहीं लेना है तो मत ले लो. Clear? Any doubts in this? Okay. So when you send the goods, when you send the goods, what is the journal entry you will pass? You will record it as sales only. Debtors account debit to sales account. By year end, say for example, you sent goods worth 10,000, out of which by year end you received 6,000 approval. 6,000 worth of goods are approved. So remaining 4,000, it is neither not approved nor rejected. It is not approved also, not rejected also. That means approval may happen, approval may not happen. So you don't know. Correct? But you have already recorded the sales. But what is actually sales? Sales is only 6,000. Why? Remaining 4,000 is neither approved, sir, neither rejected. So it is not our sales. But have you recorded the sales already? Yes, I have recorded the sales already. But is it sales? No. How much is sales actually? 6,000. What is not sale? 4,000. Should I reverse it? Yes. So that reversal is sales account debit to debtors account. 4,000, 4,000. And when I reverse it, this 4,000 should also be added to my stock. How to add my stock? Stock is an asset. So when asset goes up, it will be debited. Where it will be shown? It will be shown in trading account. So that is the second entry. Clear? Yes? Okay. Goods received but not recorded in the books. Record it. Purchase account debit to creditors account. If goods have been received and it is not recorded, you please record. Salary to proprietor. They have given if the proprietor charges salary for work done by him, proprietor salary account is debited and capital account is credited. Okay, but trust me, this is not allowed under income tax. You cannot give salary to yourself in the business. If there are partners, then it is allowed. If there are number of proprietors called partners, then this is allowed. If you are all alone, this sentence itself is wrong. If there are number of proprietors called partners, there is nothing like that. Proprietor is a different, partner is a different. Your book is rubbish on this paragraph. Don't worry about it. Mistakes do happen. Even institute can sometimes make mistakes. No issues. We will understand it in a better manner. There is nothing called as multiple proprietorship who are called as partners. No. There is nothing like that. Either there is partners, which is called as partnership firm, or there is proprietor. Proprietor is only one person. Clear? So a proprietor cannot give salary to himself, but partners can draw salary. Why? Because partnership firm is a different entity, partner is a different entity. If you remember yesterday, I have explained you PAN, separate PAN and all those things. Okay, general reserve. Whatever profit and loss is there, that will be transferred to general reserve. Suppose in your P&L account, you are having 2 net profit, 5,000. This will be transferred to general reserve. How it will be transferred, sir? P&L account debit to general reserve. Sir, why P&L account is getting debited, sir? I will explain it to you. Look here carefully. Suppose, say, by gross profit 5,000 and there are some indirect expenses, say 3,000. Okay, sir. 5,000. Here also it should be 5,000. Correct? Correct, sir. Now, here what is the balance sheet figure? 2,000. So it will be 2 net profit. Correct or no? So instead of writing this as 2 net profit, they are doing what? Consider it as 2 general reserve. 2 general reserve. So journal entry P&L account debit to general reserve 2,000. Clear? If you look P&L account like in fact, how it is done, I will actually show you. Okay, so just that you have better idea. So we show it as 2 net profit, no? 2,000. Then what happens? This account will continue. And this is called as P&L appropriation account. What account? P&L appropriation account. Here, this net profit is bought on this side by net profit 2,000. Now what to do, sir? Which side balance is higher? This side. Correct? What we have to write here, sir? What we'll write here is 2 general reserve 2,000. Clear? So journal entry P&L account debit to general reserve 2,000. See here, it is getting P&L account to debit side al bartide. So P&L account will be debited and 2 general reserve we are doing. Clear? I hope I don't have to explain you ledgers and journal entries now, which we have already discussed in detail. Clear? Cash discount and trade discount already explained long back. Correct? Cash discount is an incentive to encourage early payments, faster payments. Trade discount is something which is given on spot when the sales is actually happening. Trade discount is a direct expenses where, for example, you go to Vishal Mart, the MRP is 100 rupees and they are giving it to you for 50 rupees. So that 50 rupees is an trade discount. Clear? Now, what is cash discount, sir? You take something for 100 rupees and they will tell you if you make payment within 7 days. If you make payment within 7 days, you can pay us only 98 rupees. If you make payment after 7 days, pay us 100 rupees. Understanding? This is cash discount. Cash discount is nowhere connected to sales. Why? Because the selling price remains the same. Discount will come only after sales is done. And that discount is not depending upon your sale. That discount is depending upon your payment. How fast you make the payment, that much discount you will receive. But whereas trade discount is not like that. Trade discount happens at the time of sale itself. At the time of sale itself, the discount is given. That is trade discount. Cash discount is not like that. It is not given at the time of sales. It is given after sales is done. Like if you make the payment in 3 days, you take 2% discount. If you make the payment after 10 days, you take this much discount. Clear? Okay. So these are all the closing entries. Sir, closing entries are nothing but we have already seen your expenses should be transferred to P&L account. Your income should be also transferred to P&L account. But remember, because there is a trading account, your your purchases, your sales, your direct expenses, your direct income will come to trading account. So if you want to transfer the sales or purchases, you will transfer it to trading account. So those are the entries. Trading account to stock, to purchases, to sales, to carriage inwards. This is nothing but opening stock. Okay. Next, sales account, purchase return account, closing stock to trading account. These are closing entries. Trading account to P&L account. This is transfer of gross profit or gross loss. These two. This is transfer of gross profit. This is transfer of gross loss. Profit on loss, rent. Your expenses getting transferred to P&L account. Your interest received getting transferred to P&L account. Already discussed multiple times. Nothing new. I don't want to repeat it again. Okay. We have not seen the specimen of manufacturing account. We'll quickly see. What changes in manufacturing account than trading account? Sir, manufacturers will not have a trading account. Illapa, manufacturers will also have trading account. How the sir? Will they keep manufacturing and keep that all stock in their godown? No, right? They will also sell it. The moment selling comes, trading account will come. They don't keep manufacturing. No, they also sell it to somebody else. Correct? So, manufacturing account captures manufacturing information. Trading account captures sale and purchase information. So, what is different in manufacturing account, sir? Here, there will be opening stock. In trading account, there is something called as opening stock. Here, it will be work in progress opening stock. Sir, what is work in progress opening stock, sir? Work in progress opening stock is nothing but, suppose say, I am manufacturing a machinery. When I am manufacturing a machinery, I have put 50% in manufacturing. Like what? Sir, I have arranged the parts. I have nut bolt, everything is done, sir. The physical manufactured machine is ready, sir. Physically, the machine is ready, sir, but it doesn't operate like that, sir. Why? Because a software has to be installed inside that machine, sir. Now, is the machine ready? Can you sell it immediately? No, sir. Why? Software is not there, sir. Okay. So, machine is not ready. Yes, sir. Machine is not ready. The moment machine is not ready, it is called as WIP. Sir, can we call it as raw material? It is not a raw material also. Why raw material means what, sir? Raw material means what we purchase from the vendors and we have not done any changes to that. Say for example, best example I will tell you. You have a sweet shop. What shop? Sweet shop. Okay. Raw materials for you in a sweet shop is what? The raw materials for you in sweet shop is what? Your sugar, your besan, your atta. Yes, these are raw materials. Okay. Yes, sir. These are raw materials. I understood. Now, what happened was, I took the water, I added sugar, I started to make the sugar liquid out of it. Sugar syrup, basically. Right? Sugar syrup is what we use. Say, for example, we are making Mysore pak. What? Mysore pak. Now, I purchased sugar, I purchased water, I purchased besan. Clear? Now, sugar and water, it started to mix. Now, sugar syrup is formed. Now, my question to you, you are closed the shop today. Why? Because already it is 10 o'clock, let's say. You can't make the Mysore pak today only. Because now it is already 10 o'clock, you close the shop. Now, what you did? You purchased the raw materials, you converted into sugar syrup, but you were unable to convert it into Mysore pak. Now tell me, in this scenario, what is raw material? What is our WIP? Understand, our raw material was sugar, water and besan. But now, which raw material is still in the form of raw material only? Besan is only remaining as raw material only. Why? Because you have not done any changes to besan. Sir, sugar is already mixed with water. So, water and sugar is no more raw material. Why? Because that raw material is already consumed and out of that raw material, you have a new item called as sugar syrup. But will you be able to sell the sugar syrup directly? Is it a final product? Answer is no. It is intermediate. Correct or no? That intermediate is called as WIP. Understanding? So that is your WIP. So here again closing WIP will also come. Then sale of scrap will come. Understanding? Yes. Next, raw material consumed will come. So what are the raw material that got consumed today? Sugar and water. So that will come. So under raw material consumed, there will be opening stock, there will be purchases, there will be closing stock. So opening stock plus purchases will be added, closing stock will be reduced. Then only we'll get to know cost of raw material consumed. Cost of raw material consumed. Okay. Then there will be direct wages, direct expenses, factory expenses, factory rent, all those things, depreciation on factory, everything is put here. Whichever is relating to manufacturing is put in the manufacturing account. And after putting everything, you will get cost of production of finished goods transferred to trading account. This amount will be transferred to trading account. And this amount which is transferred to a trading account is nothing but there it is finished goods. There it is finished goods. It is nothing but in trading account we write 2 purchases, correct or no? We write 2 purchases. Here there is no purchases. Sir, purchase is there, sir. Yes, sir. That purchase is raw material purchase, which is already captured in manufacturing account. But in trading account there is no purchase. Why? Because we only manufacture. From whom will we purchase? We are only manufacturing, correct or no? So this figure will go and sit in the position of purchases. To ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಅಕೌಂಟ್ ಅಂತ ಬರುತ್ತೆ. ಏನ್ ಬರುತ್ತೆ? ಟು ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಅಕೌಂಟ್ ಅಂತ ಬಂದು ಕೆಳಗಡೆ ಬರಿತೀವಿ. ಕಾಸ್ಟ್ ಆಫ್ ಗೂಡ್ಸ್ ಮ್ಯಾನುಫ್ಯಾಕ್ಚರ್ಡ್. ಕ್ಲಿಯರ್? ಎಸ್. ಸೊ ದಟ್ ಈಸ್ ಯುವರ್ ಹೋಲ್ ಪಾಯಿಂಟ್. ಸೊ ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ಪ್ರಾಫಿಟ್ ಲಾಸ್ ಇರಲ್ಲಪ್ಪ. ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ಏನ್ ಸಿಗುತ್ತಪ್ಪ? ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ದಿಸ್ ಫಿಗರ್ ವಿಲ್ ಗೆಟ್. ವಾಟ್ ಈಸ್ ದ ಕಾಸ್ಟ್ ಆಫ್ ಗೂಡ್ಸ್ ಆಕ್ಚುಲಿ ಮ್ಯಾನುಫ್ಯಾಕ್ಚರ್ಡ್? ವಿಲ್ ಗೆಟ್ ದಿಸ್ ಫಿಗರ್. This figure will be taken to trading account. In which place? In purchase place. Why? Because there is no purchases. Rather, we are manufacturing our own goods and we are transferring it here. Clear? So this figure is important and this figure is transferred to your trading account. So to arrive at this figure only, we need WIP opening, WIP closing, raw material opening stock, purchases, closing stock, direct wages, expenses, factory expenses and everything. And sale of scrap will be reduced, and after that whatever remains will be transferred to your trading account. Clear? Yes? Okay. Limitation of financial statements. We have seen multiple times. What are the limitation? I don't want to explain it again. You have seen, no, it doesn't capture inflation. It doesn't capture non-monetary items. Yes. And there is some judgment involved. That judgment might be right or wrong. And financial statement is based upon historical method, historical basis. It is not based upon current or present value or future value. Correct? Yes. Okay. All those things. Okay. So you quickly go through this. I have done this part. It is not that I have not done this part. I have already explained. We have already seen so many times. That is why I am not repeating. In tomorrow's class, we will solve the illustration and then this chapter will be done. So in tomorrow's class, we'll complete this chapter and then we'll go to next chapter. Most probably we'll go to NPO. Which chapter will go? We are done with this. We are done with this. We are done with this. Done with this. We'll get it done tomorrow. Then this one will take on a later date because it is little bit a complex chapter. If I start now only, you will break your heads and you will not be interested in continuing the remaining chapter. So this chapter is very easy, and next this is also very easy. If you are solid with your journal entries, this chapter is a cakewalk. If you are very good with your journal entries, this chapter is a cakewalk. Remember that. So tomorrow we'll complete this chapter, then we'll take these 2 chapters. At last, we'll hit partnership and LLP accounts. Am I clear? Yes. Okay, guys. Thank you. Take care. Bye-bye. If you have any doubts, please let me know in your comment section. Thank you.